Okay, looks like we are recording. So with that, I'm going to turn it over to Scott Durbin, and we'll get it kicked off.
Morning, everybody. Thanks so much for joining in. And we've got people all across the state of Nebraska, and it's a beautiful day here in Omaha, and so hopefully it is where you are as well. I've been an insurance agent with Harry A Koch Company for 24 years. And probably the last, maybe 15 years, I've been specializing in nonprofits. I do a lot of contractors and some school districts as well. The Harry A Koch Company is an independent agency. We have offices in Omaha and Lincoln, and we've been around since 1916. So I've been around, and this topic often comes up with my nonprofit companies. So hopefully we'll learn something today, and if you've got any questions, feel free to type in on the chat box down below, and we'll try to get to those questions as they come up. I want to just let you know that we have a little disclaimer. I'm not a real attorney, so this is not legal advice. Seek your legal counsel for that, and hopefully they can advise you more than I can. Our agenda today is just a little bit about directors and officers insurance. We'll talk about employment practices liability and what that is. A lot of conversations lately have been coming up about cyber liability and what is it and do I need it. And we'll finish up a little bit with some crime coverages and things that nonprofits need to keep an eye out. And we'll leave a little time at the end for some questions as well. And hopefully when I talk, you will stay awake. I'm used to speaking in front of a live audience so I can get some feedback and see some eyes. And since I can't do that, I'm hoping you'll be able to stay awake for my presentation. Directors and officers insurance is one of those things that everybody that's got a nonprofit has a board, and you have people that sit on that board. And often it's driven by those board members asking, do I have it? Do I need it? How much limit do you have? Am I protected? So those are some of the things that we'll talk about this morning. For a lot of years, what we found was nonprofits were a little bit of hands-off. People didn't sue nonprofits. There was sort of this thought that they're in business to help others. This charitable immunity is in place, and maybe we don't need the coverage. Maybe they won't sue us. But really, in all but 9 states, as you can see there on the screen, they don't have those laws anymore. And really, the thought process from plaintiffs is, if you've hurt me or wronged me, we need to sue and get my damages taken care of. And so I think that the hands-off approach that a lot of nonprofits felt were out there, that's kind of gone. Employees, stockholders, board members will sue and try to make something change. And so boards really still need that coverage more than ever. Where are the claims kind of coming from? Insiders, so your current and former staff, outsiders, third parties, vendors, funders, other nonprofits that feel like you've kind of encroached in their area and they don't like that. Directors who sit on your board, other board members from other nonprofits. You owe a duty, and if you're not fulfilling that, they may come after you. Beneficiaries, so people that you're your clients, the people that are receiving your services. If you choose to pull out of an area or change programs, get rid of a program, you might find that some of your clients aren't going to be happy about that. And then finally, members. So if you've got a membership type association, like the Nonprofit Association of the Midlands has members, if they weren't doing what the members thought they needed to do, that could be a source of a claim. Donors, when they give you money, they feel like you ought to be doing things the way they've directed you. Sometimes they give you restricted gifts, or they give you some intention of how they'd like you to spend their money, and if you don't use it for those purposes, they'll get upset. And then, of course, you've got the state attorney general. If you're breaking laws and other things, and other government officials, hopefully you don't have the IRS and Department of Labor and things coming after you for wrongful acts. Some of the potential claim allegations, so what's causing boards to do things that maybe are causing claims to happen? Sometimes it's just not handling the money correctly. Bankruptcies, obviously, if you're using funds the way they're not supposed to be used, people are going to be upset about that. You owe a fiduciary responsibility to your members, to your board, to your clients. And if that duty is not being done, that breach of that duty is a cause of a claim. Fraud, misrepresenting funds, misrepresenting yourself. We've seen a little bit of that in the news lately, where somebody says there's something and they're not. That could cause a claim. Again, donors not happy with your use of the contributions. And then we've already talked a little bit about the state coming after you for not following what your charter says you are, doing something different than what you told them you were. You need to change those if your scope of services have changed, and you need to change those with the state. A little bit about the types of claims that are out there. 35% of nonprofits in the 2010 survey reported at least one claim in the last 10 years. That percentage has climbed to 63% in 2014. That's a big difference. Where are they coming from? You can see the differences. Shareholders or investors type suits went from 7% to 36%. Derivative shareholder suits went from 7 to 40%. Employment related, this is probably still one of the largest areas. A little bit of a reduction. It's possible that nonprofits have gotten on board with better HR, working with their attorney on contracts and proper hiring procedures. That makes a big difference in those kind of claims. Fiduciary liability, this would be protection for employee benefit plans like health plans, 401k plans, 403b plans. If you're not educating your employees, if you're not giving them help through an outside source to help them with their investment features, those kind of claims come in. And then regulatory, you can see that. What can we do? What can we put in place that will help us? Obviously, directors and officers, they're on the board to participate and to be there. Most times, you're going to ask different types of board members to have different skill sets. You might have an attorney on the board. You might have some bankers, insurance agent, lawyers. You want to use their expertise, and they ought to be involved in the meeting. If a board member can't be active or won't be active off-site, where they're reading the notes and reading the minutes and responding by phone or email, maybe that's not the right board person you want. If you're around and you know what's going on, you can stop things from happening that are bad. Good policies and procedures. Obviously, a new nonprofit isn't going to have these. That's why partnering with NAM is important. They can help you with putting good policies and procedures in place so that you train your employees, that you have conflict of interest known ahead of time, that you have good financial policies that state the true financial picture to your members, to your clients, to federal government. Harassment and discrimination situations in the employment world happen. Small offices, often people are friends, not only coworkers, and you have to be careful where those lines are drawn. So keeping policies in place so that if I do feel harassed or if I'm feeling discriminated in some way, what kind of procedures can I go through that will, I can talk to my supervisor, I can talk to someone other than the person who is harassing me. Are those policies and procedures in place? Any type of misappropriation of your assets, and this could be money, but it might also be equipment or products that you use for your clients. And if you're not using those properly, somebody's going to get upset. So let's have policies in place so that when there are donations, that the donations go to your clients and not, ooh, this is a nice jacket, I might like this, or I could use some of this food to take home with me, so I'm going to take it and use it for my own and my family's use. You need to have policy and procedures in place for that. And then finally, I put down there whistleblowers. It's important that if people do have problems, that there's a place for them to go to vent those, to explain what's going on. Often, there's something to those. And so making sure that you don't retaliate against somebody who is reporting a problem, keeping those confidential. So having policy procedures in place are very important.
I'd just like to say that in terms of the first point, one way that organizations can reduce any liabilities is by effectively orienting and training incoming board members on how to read the organization's financial statements and how to find ways to ensure that every board member can uphold those duties of care, loyalty, and obedience. And for more information on those things, NAM has a number of resources that we can provide. And in terms of the second bullet point, we have more information and samples on all of these different types of policies and procedures as part of our Guidelines and Principles program. So we encourage you to reach out to us if you have further questions about any of those. Scott, we have one question coming in already. Do people sue the nonprofit, or do they sue members of the board? In some cases, at smaller nonprofits, the members of the board have, as individuals, have more money than the nonprofit organization itself.
That's a great question and an awesome timing. It sounds somebody's been reading my notes, because one of the things I'm going to talk about is, board members and can we do without the insurance. Most times what we see is that a suit is going to name the entity first, but then often individuals are also named inside the same suit. We'll talk later about how the coverage responds to all of those, but you're absolutely right. Many times the individual board members have a lot more financial wherewithal than the nonprofit. So that's why they'll sue both. In the case where there is some egregious actions on maybe a particular board person's behalf, we might see a suit come in only suing them, because somebody wants to stop that one person from doing whatever they're doing. But in most cases, they sue both. That way, they cover all the bases, and no matter who's really at fault at the end of the day, their suit could be heard. Obviously, the indemnification of board members is something that's important. A person would want to sit on their board because they believe in your organization. They believe in what you do. They really want to help your organization. And so that's why they sit on it. But sometimes they don't want to maybe put their financial dealings at risk. They don't want to have their financial dollars have to defend themselves against things that the board does that may be outside of their control. But you can't always indemnify them for everything. You maybe don't have enough money to do that, to pay for adequate legal defense. Maybe if it's too big a claim and too much defense, you might run out of money and you have insolvency issues. Maybe you're going insolvent, and that's what's causing some of the breach of duty and mismanagement. If you don't have money, how are you going to pay for the defense? Often there's some public policy and laws that don't allow you to indemnify people especially if they're breaking the law on purpose. And so you really can't probably go without this coverage. Boards, even when a nonprofit has a big foundation, a pot of gold, if you will, we just don't see them not purchase directors and officers insurance. Some of those things that you can indemnify for, self-dealing. So if somebody's board person is acting on their own best behalf and they're doing things illegally, you can't do that. Regulatory matters and some insolvency issues will really stop you from indemnifying them. And the purchase of the policy is really what needs to be done. Really a policy we're covering, as we talked earlier, about the organization. So the entity in itself is going to be protected. The directors and officers individually will be protected. Past directors and officers, even the spouses of past or present directors and officers are included in the policy wording as an insured. Employees and volunteers when acting on behalf and in the scope of their duties. And sometimes you'll have a committee that's made up of outside people that aren't really on the board, but they serve on a committee. Those committee members are also included as an insured on the policy. So no matter how the suit comes in and who they allege to be the wrongdoer, all of those people are going to be covered. They don't cover professional liability. One of the things that we have asked of us a lot of times is directors and officers professional liability? Those two are two separate things. Professional liability, think of things like your doctor has medical malpractice, your accountant has accounting E&O, I have insurance E&O, an architect or engineer, they have professional liability. In most cases, unless you're going to be some licensed or certified individual, most of the time the courts have deemed that you're doing things in the scope of your job. It's more means and method. It's not a professional exposure. But if you have counseling, if you're a health and human service organization and you've got doctors or nurses or psychiatrists, psychologists, you'll need to buy a separate errors and omissions policy. The directors and officers policy will not respond to those. They'll have specific exclusions in that. The other thing to look for in a policy is the defense costs. So we'll see that many times someone's going to buy a certain level of limits. The question is going to be, is defense cost inside or outside that limit? If I buy $1 million policy, will the coverage include the defense? And so I need to have enough limit to pay for the defense and any settlement or judgment. We'll see most nonprofit D&O policies will have defense outside the limits, but you really need to ask your agent and read the policy carefully to know that. Today, we find nonprofits will purchase no less than $1 million of coverage, and then depending on their activities, their assets to protect, they might buy as high as $5 million or more in limits. But I would say probably 80% of our nonprofit clients are going to buy $1 or $2 million, and only those really large boards or a large board with some high net worth directors and officers that sit on them will buy the higher limits. Premiums are going to range somewhere between $750 on the low side to maybe as much as $2,500 per year. That's going to be based off of your assets, your operations, the number of board members. All of that will go into the underwriting. Other common exclusions besides the errors and omissions we talked about, a D&O policy is not a crime policy. It doesn't cover bodily injury and property damage like a GL policy would. It's not a fiduciary policy, although you might find those grouped together where a fiduciary policy and a D&O policy and an employment practices policy will go together. A D&O policy often does not cover insured versus insured. So if you have two entities that one's a subsidiary of the other, that subsidiary can't sue the parent company. We wouldn't want to have that happen. Prior acts, pending or prior litigation will often be excluded. So when you buy a D&O policy, it's a claims made form most of the time, which means whenever you start the policy, we're going to cover activities from that point going forward. We don't take care of past problems, so don't come to us and buy a policy after you guys have made a bad decision or the board's done something incorrect. We can't cover that. The application specifically is going to ask if you know of anything and you'll need to answer those and sign the application, and it becomes a warranty for the policy. Hopefully that discussion on D&O wasn't too boring. We're going to move forward a little bit and talk about employment practices.
Before we move forward, I'd like to invite anyone to ask questions, or if you need clarifications, use the chat feature on the left side, and we can try to address those. And if not, we can move forward.
Yeah, if you have questions at any time, just write them up there. We'll try to get to them. Some of this topic of employment practices will kind of go hand in hand with the directors and officers. For nonprofits, if you have employees, we're most often going to sell you a combined directors and officers and employment practices policy. Employment practices is, think of EEOC, wrongful termination, failure to hire, failure to promote, hostile workplace, discrimination, sexual harassment, those things that are EEO type scenarios that happen. Happens way more often in a nonprofit world than a D&O claim would. You're more likely to have an EEOC type claim than a D&O claim. Most of the time that's because you probably don't have a full-time HR person. You maybe cobbled together some HR documents, application, policies, procedures we talked about earlier. If you're not getting those from your legal counsel and putting together good policies and having proper HR functioning when you hire, when you promote, and when you fire people, somebody's going to be upset. It doesn't cost the employee anything to go to the EEOC and write it on a cocktail napkin that they've been harmed, and the EEOC is going to look into it and investigate it. It's your duty to then have good documentation. And if you don't have documentation to protect yourself, the EEOC, and in Nebraska, the NEOC, is going to say that this plaintiff's got a chance to sue. And now you're talking some big dollars. Damages in the employment practices area can range $700,000-800,000. Just to defend something, even if it has no merit, the cost of defense can be as much as $35,000. We've seen many cases where there really is no grounds for what the past or potential employee is bringing to the table, but just to get yourself out of that mess, the legal costs can be as high as $35,000. You can see there that the median cost for a single plaintiff going to trial is $250,000. That's a lot of money that most nonprofits don't have. They don't want to spend on something like this. And so purchasing the policy is really the true answer. We're going to be covering the policy defense cost and any indemnity for same thing, the entity, the organization, the directors and officers, employees, volunteers. So the same insureds are going to be on both policies. So whether it's your lowest manager or it's your executive director that is maybe at the point of this problem, we're going to cover all of them. As I mentioned, it's often packaged with a D&O, and that's because the packaging saves you some money. You can buy the limits so that they're shared. Maybe you buy $1 million limit. It's got $1 million in aggregate. That'd be the most that can be paid in any one policy term. And you share that aggregate between the two so that saves money. You're not buying separate limits. You're buying shared limits. Premiums range here from $200 to $1,000 for the employment practices piece alone. And again, that's really based off of the number of employees that you have.
I have a question, Scott. How specific are we in our policies about who is covered? So as people roll on and off the board, or they join a committee, or they leave a committee, as employees come and go with turnover, is that something that needs to be considered or communicated, or is it a little more of a blanket coverage?
Yeah, excellent question. You're going to fill out an application annually most of the time for directors and officers in employment practices. And so there's questions on there that you'll answer. And so if an entity changes their operation or the size of their board, those questions will come out. There are a few policies out there that might be a 2-year policy, so you don't have to fill an application out every year, but every other year. It's not specific in that I need to have everybody's name on there, and we're specifically going to cover Bob and Joe and Sandy. It's going to be all of the directors, all of the officers, all of the employees. Sometimes you'll see an application that will ask, I need a list of your board. They kind of want to look at that as to see the number. They might be concerned that there might be some high net value individuals that are sitting on that board, or maybe high profile people that sit on the board that could cause outside people to be more likely to sue. If you put a really high net and well-known individual on your board, people think, oh, I can get more money if I sue that type of organization. So that might go into place. But we don't need to specifically know each individual, and it's not specific to individual names. So when a board member comes or goes, we need to make a change.
And do the policies differentiate between committees that are outlined in an organization's bylaws and other sort of ad hoc committees, and some of which include people who are not serving the organization in an official capacity? So it might just be a committee member serving on your communications committee or something like that.
Yeah, we don't need to be specific on those committees. So if your bylaws call for, let's say, a buildings and ground, and a finance committee is going to be part of what you're filing for, this is who we are, but you later come up with a programs committee or a donor development committee, we don't need to specifically know those names of those committees. If you set up another entity, if you're going to make a legal entity, a 501c3, an LLC, a corporation, a partnership, something where it's an actual legal entity, those names would want to be added to the policy. The policy, as long as the foundation, the building company, and the nonprofit are all working together, we can put those onto one policy. So we want all the named insureds to be each of those individual entities. I don't need to name all of the committees, though. And often we'll have a board that will say, oh, all of a sudden now we're going to have a new program in place, and so we need to maybe put together a committee on that. That committee would be automatically covered. And so whether they're actually a board member or just a committee member, you could assure them by sitting on your board or committee that they're covered and they're protected.
Excellent. Thank you.
We're going to transition a little bit here. So if there's any questions on D&O or employment practices, we might want to have those now.
A question has just come in. Many states provide immunity from prosecution if the actions arise out of voluntary service in a nonprofit. Is Nebraska one of those states?
That's an excellent question that you should seek your legal advice. I don't know that I can answer that question. I know that in most cases, if you're not paid to sit on a board, there are special protections for that person. But I've still seen cases come in that scenario where individual board people were sued, and the defense is coming from the D&O policy. I could do a little more checking, and we'll maybe post on the web what that answer is. I know we have a couple attorneys that had signed in to be part of. If they would like to speak up and that answer, that'd be great. Definitely, I will get back to you with some answers on that.
Thank you for that question.
One last item that maybe I want to just talk about on the D&O and employment practices. A lot of times when somebody's trying to maybe market it out, is there better pricing, better coverages? There are quite a few carriers out there that write this coverage. We probably have 6 to 8 different carriers that we can go to. They all have little different nuances. They'll all write nonprofits. So work with your agent to try to find the company that has the best pricing, but also the right forms and coverage. Like I mentioned before, defense inside or outside the limits is a big deal, because how much money is it going to cost me to defend something and what's left of my limit? So work with your current agent to do those, and we probably would market a D&O policy maybe every 3rd to 5 year. You don't want to change that company a lot because you want them to be there. You want them to understand who you are and your operations.
Another question's come in, Scott. Is it better to have an employee manual or not? We have had attorneys serve on our board with varying opinions on this. Have you seen that play out in any of your claims?
You know, having policies and procedures in place is good, that you can refer to them and you have people that act within the boundaries of those policies. Having a written policy could handcuff you in how you could operate if something's specific or different. I think I have nonprofits that have both. I think the larger the nonprofit, the more sophisticated the nonprofit, the more likely they are to have a employee manual or handbook. The carriers would tell you in many cases that it's best practices to have one. It gives those managers, the executive director, the supervisors, a roadmap to follow. How can I treat our employees? What am I supposed to do in certain situations? I think the negative side of that is where an attorney is going to tell you that if you're not following your own policy and procedures, it puts you into a bad situation. So if you're going to have a policy, if you're going to have a handbook and it says I'm going to do X, Y, and Z, you better do it that way. And if you don't, you have less ground to defend yourself on. And that's probably why an attorney might advise to not have those. One could have policies and procedures and follow them, but not have an employee manual. A lot of times people will think an employee manual needs to be handed out to the employees. It's reviewed with them, and then they sign off that they've seen it and agree to it. You could have policies and procedures manual that's used for internal use, and that the executive director, the supervisors, the managers would use as a way to direct their actions. So good question. That's an excellent question. Today's news, transitioning to cyber liability, and how do we keep our data and personal identifiable information safe. Lots and lots of information of hacks, lots of situations that you've probably come in meetings or parties, somebody's talked to somebody about getting computer hacking. Today, that coverage is a newer coverage. And when I talk about newer in the insurance world, if it's not been around for 50 or 100 years, it's new. And this is a topic that's blowing up and it's changing daily. And so insurance companies are scrambling to try to find a way to protect their clients and offer coverage, but not have so many losses that they can't afford to do it. Nonprofits aren't immune to this. What we're seeing, the FBI was in our office helping us do some training on this specific topic. It's the number 2 priority for the FBI here in Nebraska, the Omaha office. They've told us that you'd be surprised at the number of people that have had problems. Many organizations of your size probably don't have a full-time IT person. They might outsource it. They might have somebody on staff like Todd, who's really good at working the computer and has helped me with this webinar this morning. Maybe that's the guy that you use to do all of your backup and safety and firewalls because he seems knowledgeable. But the problem is even when you have the best of IT people, you're still maybe a target for an attack. Your D&O policies are not going to normally cover cyber liability attacks. If it's specific about loss of private information, the D&O policy is not where you need to look for this. Cyber policies today, because they're not uniform, will go by the name of internet liability, network liability, cyber liability. They're sort of all the same thing. It's really the protection of the data. If there is some loss of that data, that's where you have problems. I've put on here a little bit of how the policy works. The network security and data is first party and third party. So you have some duties by law to notify people when you have a hack. You need to publicize it. You need to find out if there's crisis management. We need a 800 number to manage this. We need help and paying for someone to consult to walk us through this. Possibly they even have some extortion inside. We've got access to all your data, and if you don't pay us $100,000, we're going to send it out and you're going to lose it all. We're seeing those type of situations. And then obviously you have the third party, where the client whose data has been taken, they're going to sue because they have a loss, they have a financial loss. And then regulatory agencies will come in and fine you because you didn't do prudent person. You're not doing what's needed to protect the information. Some of the areas that how you can protect your information is to really do an inventory of what kind of data do you have. I've kind of highlighted a few of the things in this list that I thought nonprofits are more likely to have. Credit card information. You have online donors that maybe give on a regular basis and you store their credit card information. You might have information on your clients, their names and email addresses and actual addresses and phone numbers and social security information. You have a lot of employee information for your payroll records. You need everything I need to steal your identity is in your system. The employee's name, their address, their birth date, their social security number, their banking information often because you're paying them directly. So I can go out and steal that information very easily if it's not protected. We've had some attorneys come in and give us some seminars on this topic, and they believe that health information and medical information might be even more useful to a hacker than actual getting your ID or your money, because they can turn in false claims. They can order meds and sell them somewhere else. Most people don't know what that explanation of benefits you get from your health insurance is. They often don't open those in the mail. Elderly people have so many things going on in that health world that they can't keep track of everything. So what's one more claim? What's one more pharmaceutical that we order? So if you keep any health or medical information on record, those really need to be protected. HIPAA law is very dangerous with big teeth. And then obviously your business has a lot of financial information. So you've got all of your stuff out on the internet now. The cloud storage is very popular, and so protecting your data and knowing what it is and maybe segregating it is really what you want to do. Who has access to this data? In our office, we have passwords, and I can get into certain areas that I should get into, but I don't have access into other areas where I don't have a need to get into the accounting or the employee information. So don't have passwords that just allow me access to all areas. We talked about disgruntled employees. That's one of the areas where somebody not happy with what you're doing, they go in and grab the information and put it out on the internet and sell it. Having a privacy policy that protects the data is important. And again, we talked about layers of that security. What's really important to protect, and can I segregate that into what really should only be things that are done internally and should never leave our office? If it's highly sensitive, it needs to have separate protection so that you don't have a situation where you're going to have a claim. Firewalls, passwords, security updates, encryption, all things that in my world are super important. We have lots of this in the insurance and financial industry. Nonprofits shouldn't be any different. Hire good outside people if you don't have that inside person. Do an assessment threat check, have them go through your system and see what you're susceptible to. Back up your data so that if someone does say, hey, I just wiped it, it's not available any longer, you have somewhere else where you can grab that and reload it in. And then plan for these things. Plan for them to happen because they are going to happen. You need to let employees know that their use of their personal laptops need to have passwords on there. It needs to be encrypted. They shouldn't take files outside of the office that are highly sensitive. Their phone, if they have access to email or data on their phone, they really need to have password protection. Think of that no different than a laptop. It's got as much access to your systems as a laptop does. And how many times do we hear about people who lose their phone in the airport, or it gets stolen off of the plane, you set it down somewhere. Laptop and cell phone is probably one of the greatest exposures you have. You don't think about it much, but it's probably the easiest one for something to take it, to steal it, to lose it. And if it's not password protected, we see a lot of claims come in from that area. Cyber, I didn't have a slide on this, but cyber policies, they usually are $1 million limit. Often we'll have different limits for each of the different areas, for first party, for third party, for regulatory fines. But we usually see $500,000 or $1 million limits in each of those areas is what someone will purchase. The application for a cyber liability policy is very useful in trying to assess your risk. Get an application, start to fill it out, have your IT and different departments look at that, and the answers to your questions will lead you to whether or not you're doing the right thing to protect your data. So I've had a lot of clients that have taken the application, started to fill it out, and then said, ooh, we've got a lot of no's here, and we probably should have yeses. So maybe we need to put our IT department on to changing some of our policy and procedures before we really apply for the coverage. Obviously, if you're not doing all of these good firewalls, passwords, updates, encryption, the price of the cyber liability is going to climb. It's going to be more expensive. So I would suggest talking through it in your office, talk with your IT people, think about the data that you have, maybe get an application so you can at least look at some of the questions and what they think are important from a carrier's view. And then if you want to purchase it, we can go out and look at several different companies. Prices on cyber liability, depending on the size of your organization, will run from maybe a minimum of $2,500, maybe $2,000, and go up to $6,000, $7,000, $8,000, $9,000, depending on the size of your organization. I would say for your average middle-sized nonprofit, you could be talking somewhere in the range of $7,500. A large nonprofit, the cost may be as much as $10,000 or $12,000 a year. I don't know if there's any questions that have come up on cyber, but feel free to write in a question if you have one. We'll transition a little bit quickly here into the last few slides for crime and funds transfer. This sort of ties in a little bit with the whole hacking. We think of outside hackers, but it could be inside people. Employee theft is often called fidelity in our world. It's stealing of money, inventory, contents, computers, whatever you have that an employee steals needs to be covered under a crime policy. If you have inventory, computers and stuff, and an outside person breaks into your office and steals them, that's covered by your property policy. We need employee theft fidelity coverage when it's an employee that does it. Your ERISA plan, so a 403B plan, needs to have an ERISA bond. It needs to be equal to 10% of the plan assets. A crime policy will often give you those together. You'll get both employee theft and an ERISA bond included in that policy. If your organization goes out and works with clients in their home, if you have individuals that go out and work at other businesses, if your employee steals your client's property, that's a separate coverage called third party or theft of client's property. Often we'll see where your clients will maybe ask about this. They'll demand it in a contract. And so we can buy that coverage. Those limits will be smaller usually because they don't have access to hundreds of thousands of dollars. So we might put in $25,000 or $100,000 maybe of coverage for that, because it's hard for one of your employees to walk off with that many diamond rings out of your client's home. Computer fraud and funds transfer fraud is the stuff that you've been hearing about, where someone steals your username and your password, and they get access into your computer system and into your banking. Today, I've had 6 clients myself, just within the last couple of years, that have had funds transfer fraud happen to them. It usually happens with an email that comes across saying, hey, I've got a problem with your PO or your invoice, or this document you sent me, I can't open it, and you click on the wrong thing on the email, and now there's a keystroke memory virus on your computer. So viruses and things like that are kind of covered by the computer fraud piece. Funds transfer fraud would be, now that I have your online banking information, I go in and I transfer money out of your account into some mule accounts so that I get the funds. And this happens very quickly. It's a very specific coverage, and it's called funds transfer fraud or fraudulent wire transfer. You need to understand that your employees need to be trained to not open up strange emails that don't seem to make sense. Hovering your mouse over someone's email address often will show you a different IP address. If it doesn't look like it's coming from somebody you know, I'd be leery of it. Be careful when you open up attached documents. Often these hold viruses, and so that's a problem. And the last item here on this slide is social engineering. That's not a bunch of engineers getting together for drinks. This is actually emails that come from different parties that look like they're coming from inside your own organization to do something. We've heard in Nebraska a corporation where the CFO got an email from the president. They were doing work in China, and so the president's email said, wire transfer to this Chinese bank millions of dollars because we need to pay them. And so the CFO wired the money. A day later, got a different email, got another deal going in China, and it all seemed to make sense. It looked like it was coming from the president's email, and so the CFO did it. And after $17 million had been transferred over, they found out, well, it wasn't the president. It was somebody who was acting as the president, had hacked into the system and sent the email. I thought this was kind of strange. It's rare. It doesn't happen. But we actually had it in our office. Luckily, our president and our CFO were at a function together. It was a training. They had been sitting together. They left. Our CFO looked at his email on his phone in the parking lot of the convention center. He saw an email from our president saying, wire transfer some money to this account. We need to pay this. And he thought that was strange. Why didn't he tell me when I was sitting next to him that we needed to do that? So he called the president, and our president said, I didn't send an email. And our CFO said, yeah, you did. And he goes, no, I didn't. When we got looking at it, it looked very close to the president's email, but it was missing a dot. I've seen where L's were turned into ones. They just changed it a little bit that makes it look like it's the email coming from inside. That's social engineering. That coverage right now today is a new coverage. This is probably within the last year or a year and a half that this topic's even been talked about. It can be added to a crime policy. Again, probably proper education of your staff is more likely to help in this area, but you could probably get a price for the social engineering to be added on. Some point down the road, it might be a situation where that coverage gets thrown into a D&O policy. It might get thrown onto a cyber liability policy.
Scott, we have a question that came in. How do you protect your organization from employees taking information with them when they leave the organization, such as a list of donors or maybe proprietary, materials?
Yeah, I suppose that's going to depend on each different individual organization, and so maybe something we'd want to talk about in person or by phone or with your agent. Obviously, if you know you're going to have a situation where you're going to have an employee change, where you're going to have to let somebody go, being able to protect the information that they have and the access to the information, this is where those access to usernames and passwords come in handy. Where we've had an employee that had to leave our employee, we might shut off their password so that they don't have access from outside the office, or we might restrict their use or access to it to only work hours and not after hours. If you know that they have a laptop with lots of stuff in there, you might want to take that laptop and do some upgrades or keep it secure after hours so they can't take it with them. It's obviously a situation that's tough to control. If you know something's going to happen and you're going to have to let that employee go, I would say locking down that information and the access to it is super important. We can sure talk more individually, but I would say that would be take away the laptop, take access away for any outside access into your systems, lock down private areas so they can only get into certain areas. That might be helpful. And this would this fall under the employee theft from the last policy you described? Yeah, if it's an employee that does this, it is going to be in the crime policy. That's really where that's going to be. The social engineering is usually when it's someone not an employee pretending to be an employee. The crime policy is going to handle most of that, I would say, and having a limit that's adequate to cover what's out there. Obviously, if they just steal data and there's no money, there's no actual property, this could run into the cyber world. Property is defined as tangible property. Data in the insurance world, legal world, is not tangible. So a crime policy, if I steal the chair or the laptop, that's a crime policy. If I steal money, that's a crime policy. If I steal data or private information, that's not tangible property. That might fall into the cyber world. Depending on what I do with that data, if I get access to money and other things because of the data that I stole, then it might flip back over. That's why really having a good package of coverages in this area are important. I would say that the correct packaging for most nonprofits would be a D&O policy, the employment practices liability. If you have a 403B or a 401k plan, buy the fiduciary liability. The crime policy that also includes the employee dishonesty, the third party if you need that, and for sure the computer fraud and funds transfer fraud. Today, I think we ought to be investigating the need for cyber liability and try to assess our risk. Remember, the bottom line, and I'll leave this with you today, is that insurance is only one method for handling your risk. Knowing what your problems are, knowing where the potholes are so that you don't fall into them, is more than half of the battle. Managing your risk is really the most important thing. At the end of the day, after you have all the best policy procedures and you manage the risk as good as you can, the purchase of the insurance policy gives you that safety net to protect your entity and to defend you and pay for the defense when something goes wrong.
Scott, thank you very much. This is a perfect transition. As you try to build out your own infrastructure and your own capacity in your organization, we want you to start with the guidelines and principles for nonprofit excellence. It's free resources for Nebraska and Iowa nonprofits. We look at legal compliance and best practices in all areas of management and operations. Risk management is not explicitly pulled out as a section, but it's interwoven into all of the other 12 areas. We have a wiki that pulls out those infrastructure items and provides background information, further reading, and resources in all of those areas. We have checklists that are available for download in PDF form that you can pass out to your board and staff and identify any needs or gaps that you might have in your infrastructure. And we have those same checklists in an online format so that you can go on just like taking a survey, and it will crank out a report for you that prioritizes the actions that you should take, starting with any legal compliance gaps that you have and then working its way down. And for organizations that are NAM members, we offer a best practices partnership where we identify your organization as being legally compliant and committed to the guidelines and principles for nonprofit excellence. Please give me a call or send me an email if you'd like more information about the guidelines and principles. Also, webinars such as the one that we're recording today are available for you to sort of lay that foundation that you need for a good nonprofit management. I will make these slides available, and this recording will also go on our YouTube station and the Nonprofit Association of the Midlands website. So I want to thank you all for tuning in today, and especially want to thank Scott Durbin for his time and his expertise on this matter.
Thank you very much. Stay safe and have a great day.
Bye, everyone.